Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every single time that the market tested its zone, it got rejected to the upside aggressively. And right now, the market is in the process of rejecting once again this exact same zone. So there is definitely the possibility of seeing more bullish price action being created away from this area. So the monthly time frame at the moment does seem quite bullish. Now, let's drop that on the weekly time frame and see what we have. Now, from a weekly standpoint, the situation is quite clear. We can notice the correction into the area that we have previously identified, and then the massive rejection to the upside. Now, in a situation like this, there is definitely the possibility of seeing more bullish price action being created away from this area for a further rejection away from this zone, considering how aggressively the market immediately rejected this zone to the upside, meaning that there is the possibility to see from here a deeper rejection similar to the ones that we have seen in the past when the market was testing this exact same zone. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, this is where things start getting quite interesting because we can notice how we just had a shift now from a daily bearish market, so with the creation of lower lows and lower highs, to now the creation of a bullish trend and bullish market structure, so the creation of higher highs and higher lows. And right now, we just had yet another higher high, so we had the previous high here, and now the market just created a higher high. So the next logical step would be for the market to create a higher low, so higher than the previous low, and then for the market to create yet another daily higher high if it wants to continue with this bullish trend from a daily standpoint. Now, before we dig into more details into the structure and technicals here of the daily time frame, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's look at the data precisely for the AUD. Now, if we're looking at data for the AUD already, we're looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, the net positions have been decreased, meaning that institutions with the last reports have been moving to the bearish side for the AUD. If institutions are so interested in shorting the AUDUSD, so decreasing their net positions, they should also be actually shorting AUDUSD, right? However, we can see clearly that that is not what is happening. In fact, we're actually seeing shorts getting closed. So what is it that is bringing these net positions down? Is actually profit taking on the longs. In fact, we can see tens of thousands of longs getting closed, but no shorts getting opened. Actually, shorts are getting closed as we are speaking. So this means that if the market here will provide a correction, there is a good probability to see more institutional longing. So institutions starting to long again, and the price potentially pushing higher, and then some more profit taking, bringing another potential correction, which is a very common pattern in the market. So in a situation like this, we have to be very careful because no institutional shorting is happening. Actually, shorts are getting closed, so it should be only a matter of time before longs get opened as well. And it could already be, since this move to the upside is yet to be accounted for, that this push to the upside was already fueled by more institutional longing, and that will only be seen with the new report, which is coming out in just a couple days. So this is very, very, very important to keep in mind. Now, before we move back to the technical side, by the way, if you still haven't, go and join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, let's keep this in mind and move back to the chart from a technical standpoint. So here in the daily, as we were saying, the market is currently in a bullish trend and it has just created a strong impulse. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly this area, meaning that if the market here will provide a correction to this zone, there is a good probability of seeing some more institutional longing inside of this area. And at that point, this could definitely further increase the probabilities of a potential rejection to the upside away from this level. So if the market will correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.